All right, welcome to Coffee with Marcus and Mark. In this show, we are going to talk to you about what's happening in the markets and how we are trading it. Today is Wednesday, August 31st, and wow, yesterday the S&P 500 breaks through the 50-day moving average, dips below 4,000. So it seems that markets are in free fall after positive economic reports. And then we have the New York Fed president that's saying interest rates must go much higher, and so stocks give back half of the gains of the summer rally. We have more Fed members scheduled to speak today, and we'll tell you of what they say and how this is impacting the markets. So, plus, we'll show you our current positions and how we are trading these markets. So, as you can see, we have a lot to talk about. So, we're getting started here in just a second. But if this is your first time here, hi, I'm Markus Heitkoetter. This super smart guy over there is my head coach, Mark, and we're real traders who trade live accounts, and we got a ton of trading experience, and we're showing you how we trade these crazy markets, because I think that this will be helpful for you, because we've been doing this for a long time and we know our stuff, and we're not afraid to tell you like it is. So if you're looking for some honest insights into the fascinating world of trading, you are in the right place. And yeah, talking about real money, real trades, real pain. What the heck, Mark? We were saying
Yeah,
the 4,000 level should hold, and yesterday, boom, sliced right through it.
it did, Marcus. I mean, gosh, a pretty decent down day, down over 1%, especially considering that this is the third straight losing day in a row. So getting below that 4,000 level. Today we have been trading, oscillating above and below right now, below for sure. But that 4,000 level, well, we'll see if it ends up holding by the end of the day.
Yeah, literally. This morning until just now, this episode is probably sponsored by the battle around the 4,000 level. So that's what we saw. And this morning there was a sigh of relief. We are above 4,000, so maybe it holds. And you see, I plotted the 50-day moving average there on the daily chart, because that's definitely one of the level. And yesterday we closed below the 50-day moving average. And yeah, has been a while since we have done that.
And again, you have this range right now around 4,000 where you can make a case that should you be bullish, should you be bearish, and it's battling it out, whether it's the 4,000 level, the 50-day moving average, or a 50% retracement from the lows that we had in June to the highs that we had in August. A few reasons to consider what's going to happen now, because this is the line in the sand, at least in my opinion. And right now we're edging lower after being a little bit green.
Yeah, so we'll see what happens for the remainder of the day. Right now, the focus is really, are we in a recession? Will we head into a recession? And how much longer will the Fed keep raising interest rates? And how much pain are they really willing to inflict into the markets? Because that's what Powell said last week, that we should all expect some pain. And this is when the markets started basically this slide. Until then, they were doing really good.
Exactly, and it's really that anticipation. What type of pain will the Fed impose on the market, because their rate hike increases, and also the balance sheet, what they could do there. The balance between you're putting the market in a recession, putting the brakes on the economy to combat the strong job market and wage growth, and that impact on inflation. The Fed has some tools that could really slow things down to achieve their goals, and that's what right now traders are worried about.
Right. So let's see. But how is the economy doing right now? So we have more economic reports that were being released yesterday. Yesterday, the consumer confidence came in much stronger than expected, and also the JOLTS job openings. And even this morning, I mean, we saw the ADP non-farm employment change coming in much better than expected.
Was it better than expected? Well, okay, I no, because it was 132,000 jobs versus
Oh,
300,000 forecast.
the jobs added. I thought that this was unemployment claims added. Yes, but you're right,
No,
because we're not talking about unemployment. That's for tomorrow. So tomorrow we have the unemployment claims. Today it was non-farm jobs. You're right.
Yeah, but this is a mixed bag because you see here, okay, so the previous was 128,000 jobs added. Then last month it was 132,000, so slightly higher, lower than forecast, which would be a positive. However, and I think that this is new that they're doing their data a little bit differently. They also reported the annual pay. They're looking at some pay numbers, and it showed that the average annual pay was up 7.6% for the month. So, kind of a mixed bag. You have fewer jobs, which would be a good thing. Again, not for the economy, but for inflation. But then average annual pay was higher, which is a bad thing for inflation.
Right. Well, plus we have all the FOMC members speaking now. After Powell delivered his 8-minute speech last week, now we have everybody else chiming in. And we already had somebody, Brenard, speaking on Monday. Yesterday, we had FOMC member Mester speaking. Yesterday was Williams. And Williams actually said, yeah, you know what? Forget about any rate cuts coming anytime soon. In fact, no rate cuts 2023. And then this morning we had Mester speaking, and she said basically the same. And she says, well, we got to raise interest rates above 4% and no rate cuts through at least 2023.
That's interesting. I mean, it's a very forward looking, but that is something that traders were, focused on. Are we going to get this big push with higher interest rates and then cut them back to bring them back to normal levels? And at least for this foreseeable future and going through 2023, the more vocal members are saying, nope, they're going to stay high.
You know what? Honestly, I think this is just, get ready, getting prepared for a worst case scenario. I do believe that at some point in 2023, maybe towards late 2023, we might see some rate cuts. But it's right now, it's like, okay, you all thought we were kidding. We're not. And this is where Powell
Yeah.
started with this, we are not kidding. Be very prepared. And now everybody said, yes, we go to war here. We will get this inflation down. I think it is way too early right now to predict that there will be no rate cuts in 2023. I think this is just right now managing expectations.
Absolutely agree, Marcus. I mean, the Fed has its dot plot to show like what they believe, but there's so much data that's going to be available in the next 3 months, let alone the next 12 months or the next 15 months for the Fed to interpret and respond to. So I think it's a little bit of posturing, like we're ready to take care of business.
And honestly, that's what we want to see from the Fed. We want to see that they are really serious about tackling inflation, because many say that they are behind the curve here and that they really need to take action. And if you're looking at the probabilities of the next meeting of a rate hike, it still is not 100% certain that they will raise it by 3/4 of a point, by the 75 basis points. I find this really, really interesting, because with all this tough talk, you would think that traders are factoring in, oh yeah, they're basically telling us it will be a 3/4 of a point instead of half of a point. But that's not what's factored into the probabilities right now.
Sure, sure. I mean, we see that the 75 basis point is definitely the most favorite, but you're right. I mean, even over the last couple of weeks, this has flip-flopped, and we're not looking at 90% probability. It's still within, a level that could easily start to lean the other way. But yeah, the 75 basis point is the most favorite, at least for now.
21 days to go and many more economic reports that are coming out.
Yep, more jobs data, CPI data, PPI data.
Yeah,
We'll
and
see.
that's pretty much the big one for this week. On Friday, the jobs data. And this will be interesting to see how the markets are reacting to this, especially considering that we are going into a long weekend. So next Monday is Labor Day, and therefore markets will be closed here in the US.
Yep, and slow data week for that short holiday week, but then the week after that, that's when you get the big reports for inflation.
Yeah. So definitely interesting right now looking at the markets before we start looking at our positions. Still pushing lower here, and we just see the uncertainty. But here's the interesting thing, right? I mean, so for today, the markets are down and the VIX is down. So let's go to a daily chart here. So the VIX, the fear index, usually what we see when the markets are going down, the VIX is going up because this kind of measures the fear and uncertainty in the market. And I found this super interesting that we're moving lower in the markets and lower in the VIX. What do you think about
That is
that?
interesting. Yeah, at least for now. But that is interesting. It seems like after this, big spike in volatility and basically options premium going higher because of that. At least for today, with some indecision, some back and forth, there isn't a continued spike, but it is interesting for sure.
Yeah, so I believe that right now the markets are reacting to the tough talk of the Fed and are more concerned. And this will also believe that when we get more certainty, we will quickly push back towards these highs here. So yes, we have a retracement right now, and it seems that the Fed and all of the Fed members want to prepare us for a worst case scenario and say, hey, take us seriously here. And that's what we're seeing.
Yep.
All right, let's take a look at our positions and what we are doing here right now. So, I mean, there on days like this, there are just fantastic opportunities. Right now, we see that there are 20 possibilities are popping up on the scanner, and there's quite a few good ones where we can sell puts because on down days, that's where we get more premium. Also, when we see that the VIX is at elevated levels, that is perfect. But we already went shopping on Friday, so our shopping bags or our accounts are full of positions.
Yeah, I'm comfortable with the ones that we added, gold, Barrett gold, and
Let's look at this. So Barrick Gold, we added this one.
yep.
Solid support at around 15 there, and we will see if this supports hold. So yesterday dipped slightly below this. Now, right now, battling around 15. So we see current price right now 15. So this will be an interesting one, and I would not mind at all to get assigned on this stock and own gold, Barrick Gold Corporation here.
Sure, they pay a decent dividend, and if the U.S. dollar does pull back just a little bit, even if there's short term increase, but if it pulls back a little bit, gold should go up, especially in an inflationary environment.
Yeah.
And then Google, I'm liking this one.
Google, I mean, that's a good one. So we'll see because we identified some solid support here. And thus far, the support is holding. If we get assigned, I wouldn't mind owning Google at all because here I
Yeah.
also believe that Google probably in the next swing quickly goes back up to 120. And then I don't think that 150, maybe 140 by the end of the year is out of the question. So I'm okay buying it at a discount at around 100. Right now, support is at 105. We sold the 108, and I'm okay buying Google for 108.
I concur.
All right. Macy's. So this will be interesting because Macy's has been holding up really, really well. Sold the 17 put. So here we'll see also solid support at 17. And this might be a photo finish for some of the stocks going into Friday, going into the long weekend.
Very well could be because you're near that 17 strike. I didn't trade this one. I like it, but at the time I was looking for the 1650, just a little more protection to the downside. That wasn't available, and then I picked some other trades, but I like this one.
Yeah, and right now seems that even the 16 is available. That would be for next week, though. So all of the positions that we entered last week will expire on Friday. So, I mean, it'll be interesting. It'll be super
Yeah.
interesting. We'll talk about NVIDIA and TPR in a moment, but also UAL, United Airlines, we sold some puts here, and we sold the 35 strike. Right now it's trading at around 36. So we'll see what happens there.
Yeah, I like this one.
All right, NVIDIA. So NVIDIA also yesterday sliding, got assigned the 195. You have AMD at 104, and that's where we'll see. All right, I mean, we need these stocks to pull up. This morning, there's a little bit of weakness in NVIDIA and AMD, and we just talked about it. So nothing really in the news other than maybe HPQ. So Hewlett Packard this morning, they reported earnings.
Yes, and so there's HP and then HPQ. HP, they said sales declined and they cut its outlook. Just one more, computer company basically identifying a slowdown in spending. Um, and HPQ, I think it's more on the this cloud services side. They did post a higher profit for the quarter, but it's just, again, nothing specific to say, hey, AMD and Nvidia should be down 3% for the day. But I think it's just this forward looking. Well, sales are decreasing, right? That guidance, and so a little overreaction right now with the
Yeah.
broad market pullback.
Finally, TPR have been selling calls right now, not being able to sell calls, but TPR, definitely considering the overall market, is nicely hanging in there.
Yeah, and if you have this for another week, you get a decent little dividend.
Yeah, because the dividend payment is coming up, and how much is it? Let's
September 8th.
just see.
September 8th.
On September 8th. So yeah, it seems that I'll have it. So the dividend is
30
uh,
cents.
30 cents. Wow, this would be nice. Let me bring the calculator over here because I have 2,700 shares times 30 cents. That's $810. I'll take this. So that's another added benefit when you're trading value stocks. And this is when we are going back to the filters here, that when you start looking at dividends, only show stocks that do have dividends and you're getting dividend stocks. You have a nice bonus here. I think it's the same with NVIDIA. NVIDIA is also issuing a dividend. NVIDIA is not as generous. So I
So
think
Marcus,
NVIDIA, it's
when we're
also,
in Grand Cayman, how are you going to spend that $810?
oh, I'll find a way. I'll find a way to do that. So, I mean, when you are owning the stock and when you are selecting the right stock and you're getting dividend payments, I mean, that definitely helps. So I've been collecting quite a few $1,000s this year thus far in dividends, specifically from TPR, NVIDIA, and then there was one more. I think it was ADI. I can't remember exactly. Anyhow, yeah, cool stuff. If you would like to know how exactly we trade these markets, I'll link to a video right here so you can take a look at this. Stay tuned so that you see how we end this week, because we will have a photo finish here and we'll definitely keep you posted. So tune in again tomorrow. We'll see you then.
Happy trading, everybody.